Hi, are you a practicing auditor looking to strengthen your audit documentation and engagement procedures? Or are you preparing for professional exams? Then today's lesson is essential for you. Welcome back to the channel. Today, we're breaking down one of the most practical and exam-tested standards in auditing, ICAN 210, agreeing the terms of audit engagements. Before any audit begins, before any risk assessment, before any audit evidence is gathered, there must be a clear agreement between the auditor and the client. ICAN 210 breaks or explains how that agreement is formed, what must be documented, and what happens when management refuses to cooperate. Many audit failures start from poor engagement planning, and ICAN 210 prevents exactly that. So get your notebook ready, because mastering this standard will sharpen both your real-life audit practice and your exam technique. Now let's begin. Think of this standard as the rule book for the very first and perhaps most crucial step an auditor takes with a new client. It's all about setting the stage properly to ensure everyone is on the same page before any actual audit work begins. So what exactly is ICAN 210 all about? As the title suggests, it is the international standards on agreeing the terms of audit engagements. But what does that really mean in practice? It provides a clear framework for the auditor on three key decisions. First, when it is appropriate to accept an engagement in the first place. Second, what fundamental conditions must be in place before we can say yes to a client. And third, once we decide to proceed, how do we formally document that agreement in a way that is clear and legally sound? That's where the engagement letter comes in, and this standard guides us through all these critical concepts. If we had to boil down the entire purpose of ICAN 210 in one simple sentence, it will be this, and that's to ensure that there is no misunderstanding between the auditor and the client. An audit is a professional service with specific legal and professional obligations. Without a clear upfront agreement, there is a huge risk that the client might expect one thing, like the auditor guaranteeing to find every single error, and the auditor delivers another. ICAN 210 is the tool we use to build a fence around the audit, clearly defining the boundaries of our work, our responsibilities, and the client's responsibility. Before an auditor can even accept or consider accepting a new client, ICAN 210 requires them to confirm that certain preconditions for an audit exist. These are non-negotiable starting points. They are fundamental preconditions. The first relates to the financial reporting framework. The auditor must determine if the framework that management has used to prepare the financial statements is acceptable. Is it the International Financial Reporting Standards? Is it a relevant locally or generally accepted accounting principles, GAAP? Without an acceptable framework, the financial statements lack a benchmark for preparation, and the auditor has no criteria against which to audit. An audit simply cannot happen in a vacuum. Second precondition, which is absolutely critical, is about management's role. The auditor must obtain management's acknowledgement and acceptance of their own responsibilities. Management needs to formally accept that they are responsible for three key things. First, for preparing the financial statements in accordance with that acceptable framework we just discussed. Second, for establishing and maintaining the internal controls necessary to prepare financial statements free from material misstatement. And third, for providing the auditor with complete and unrestricted access to all information they need. This is non-negotiable because auditors audit financial statements. We do not prepare them. We express an opinion on management's work. If management is not willing to take ownership of these core responsibilities, the audit cannot proceed. Now, once the preconditions are met, we move to the core requirement of ISA 210, which is engagement letter. And this is the formal written contract between the auditor and the client. It's more than just a formality. The document serves as a critical line of defense for everyone involved. It protects the auditor by clearly stating that they will, or by clearly stating what they will and won't do. It protects the client by outlining what they can expect from the auditor. And ultimately, it protects the users of the financial statements by ensuring the audit is conducted on a clear and professional footing. It is the bedrock of the entire engagement. So what exactly goes into this crucial document? ISA 210 is very specific about the key contents. The engagement letter must clearly state the objective and scope of the audit, what we are setting out to achieve. It must outline the respective responsibilities of both the auditor and management. It must name the applicable financial reporting framework being used, like IFRS. It should describe the expected form and content of the audit report we will issue. And importantly, it must include a reference to the inherent limitations of an audit, that due to the nature of audit evidence and the use of sampling, there is an unavoidable risk that some material misstatements may not be detected. Skipping any of these elements creates ambiguity, and in the world of auditing, ambiguity equals increased audit risk. The engagement letter is our primary tool for eliminating that ambiguity. Let's spend a moment reinforcing why this document is so critical. The engagement letter is the foundation of a successful audit relationship. Its primary purpose is to prevent misunderstandings by creating a shared understanding from day one. It clarifies who is responsible for what, leaving no room for confusion later. This clarity significantly reduces the auditor's legal exposure. If a dispute arises, the first thing anyone will look at is the engagement letter. It also, by setting clear expectations and responsibilities, contributes directly to higher audit quality. In my experience, many audit disputes can be traced back to a simple fact: responsibilities were not clearly defined at the outset. ISA 210 is specifically designed to prevent that very risk. What about audits we've done before? For recurring audits, the good news is that you don't need to issue a brand new engagement letter every single year. The original agreement often remains valid. However, the standard requires the auditor to exercise professional judgment and reassess the situation each year. Have any significant circumstances changed since the last engagement? We need to consider things like a change in ownership of the business, a change in key management personnel, a shift in financial reporting framework they use, or even a significant change in the scope of the audit we've been asked to perform. If something fundamental has changed, then a new engagement letter is necessary to reflect that new reality. Now we move to a very clear-cut situation in ISA 210. What happens if management refuses to acknowledge their responsibilities? What if they push back on providing us with all the information we need, or insist that we should help them prepare the financial statements? See, the standards guideline or guidance is crystal clear. If management will not accept or acknowledge and accept those fundamental responsibilities, the auditor must not accept the engagement. It's a deal breaker. This is a very frequent topic in professional exams or academic exams. And it's important to remember, there is no room for negotiation on this point. Now, if the auditor has already accepted the engagement, perhaps for a recurring client, and later discovers there is a serious issue, maybe management is now refusing to provide necessary information, or the acknowledgement of responsibility was, in hindsight, not genuine. In this situation, the auditor needs to consider the implications and determine the appropriate course of action. Depending on the severity of the issue, the auditor may need to consider withdrawing from the engagement, that is, resigning as auditor. Alternatively, if the issue relates to a specific matter but doesn't completely undermine the entire engagement's foundation, the auditor might be able to continue, but will likely need to modify their audit opinion, perhaps issuing a qualified opinion or a disclaimer of opinion, depending on the circumstance. This decision requires careful professional judgment. Sometimes during the course of an engagement, a client might ask for the service to be changed. For example, a client might ask to change a statutory audit to a less intensive review engagement or to agreed upon procedures. When this happens, the auditor has a professional duty to stop and evaluate whether there is a reasonable justification for this change in terms. A valid reason might be a genuine change in circumstances, like new regulations no longer require a full audit for their company. Another valid reason could be misunderstanding, or a misunderstanding about the nature of the audit at the outset, which a proper engagement letter should have prevented. Conversely, an invalid reason, and this is key, would be if management is trying to avoid a qualified or adverse audit opinion. So imagine the audit is nearly finished and we've identified material misstatements that management refuses to correct. If they suddenly ask to switch to a lower level of service, that is a major red flag. It looks like they are trying to audit shop and avoid a bad audit report. In such case, where the reason for change is not valid, the auditor must refuse to change the engagement. The audit, with its associated opinion, must proceed as originally agreed. ISA 210 doesn't exist in a silo. It's the first step in a chain of standards that govern the entire audit process. It works closely with other major ISAs. For instance, it provides the practical agreement that fulfills the overall objectives set out in ISA 210. It establishes the terms that will be managed under ISA 220, which is all about quality control. The engagement letter itself becomes a key piece of audit documentation under ISA 230. The understanding of the entity and its environment, which starts here, fits directly into the risk assessment required by ISA 315. And finally, the agreed upon scope and responsibilities directly influence how we form our opinion under ISA 700. The simplest way to think about it is this. ISA 210 happens before the audit begins. It's the contractual handshake that sets the foundation for everything else. Without a solid handshake, governed by ISA 210, the rest of the audit process is built on sand. To wrap up, let's quickly recap the key takeaways from ISA 210. First and foremost, this standard exists to ensure absolute clarity before an audit even begins. Secondly, the two fundamental preconditions for an audit, talking about an acceptable financial framework and management's acknowledgement of its responsibilities, must exist. These are not optional. Thirdly, the engagement letter is a mandatory non-negotiable document that formalizes the agreement. And fourthly, for reoccurring audits, we must review the terms each year to see if circumstances have changed, which might require a new letter. And finally, the preconditions for an audit are not, if the preconditions of an audit are not present, the auditor is prohibited from accepting the engagement. See, this standard sets the rules for a proper start. So to leave you with a final thought, if ISA 210 is considered the foundation for all auditing, providing the overall objectives, then ISA 200 is specifically the foundation of the audit engagement. It's the bedrock upon which a clear, professional, and effective relationship with a client is actually built. By getting the terms of the engagement right at the start, we set ourselves and our clients for a successful audit. Excellent work, staying all the way through. Many professionals focus only on audit procedures, but top performing professionals understand something deeper. Auditing starts long before testing begins. It starts with clarity, structure, and professional discipline. Exactly what ISA 210 teaches. Keep building that technical strength. Keep sharpening your professional judgment and keep learning one standard at a time. If this lesson helped you, stay connected because we're breaking down the entire ISA series into simple, succinct explanations designed to help you comprehend better. See you in the next video. And until then, bye for now.